Okay, welcome guys. The session today is technical analysis for novice trader, and this session is specifically for people who are very new, very novice, and all the jargons they are unfamiliar with. So this session will help you understand the very basics. I will touch upon few topics like moving averages or trends, but I may not go into the detail. If you would like to know more into the detail, you can watch the other videos, or we can also take some queries. Alright, moving ahead, as you will know that always I put out a disclaimer that trading is risky. Here there are no rules, there is no set guaranteed return, and you can or you may or may not lose all of your capital. So you have to be wise in your decision. All the analysis that we may have today, it is not a recommendation to buy or sell anything. Please note. Okay, whatever I'm analyzing before you, I'm just doing it for myself. It may so happen even if I find a good trade, I may not enter it because my money management or my loss potential does not allow me. So it depends on person to person, and we have to use our judgment. Okay, moving ahead. Introduction. Welcome to the world of technical analysis. Why I say a world? Because technical analysis is just a small word in per se, but when you delve deep into it, you'll find that it is a completely different world. It is a world where you do not need to interact with anybody. You have your charts, you have your screen, you have your price movements. Okay, you have your price movements, and with that you are able to, just a minute. Yes, so sorry, I will not be able to maximize more than this because I have to switch to charts in between and it will be very cumbersome. I'm using a dual monitor. Okay, so I guess this is visible. Okay, so when you delve deeper into technical analysis, you'll find there's so much everything that you would probably know that is happening in terms of price, in terms of news, in terms of any deals, everything you'll see on the charts. That is why it is a complete world in itself. What I'm telling you right now, I'll touch upon this later also, just to give you a preview that what we are dealing with here. It's a big world in technical analysis. Okay, so coming to the definition, what is a technical analysis? What is technical analysis? I cannot emphasize any harder on this that it is plain demand and supply. Whenever we are analyzing what we do, generally we get into many analysis, we get into many pattern recognitions or studies. We forget one very basic thing. It is all about buying and selling. It is all about buying and selling. If in market buying is overpowering the selling, then prices tend to move up. Do you agree or not? It will never happen. It will never happen that buyers are very strong. They want the particular entity or commodity they want to buy, and the prices are declining. That will not happen. And if that is happening, you should get into it. You should be a buyer, because sooner or later the buying power will take it forward, and take it forward with a bang. This is what the technical analysis is. So if you see the chart here, I've copied this chart from somewhere. It is not important. What we can see is whenever prices came into this area at the bottom, is it visible? The demand zone, it is marked. Whenever prices came into this box, they moved up. Now what is this price for? This price can be anything, does not matter. We are right now dealing with only price movement. It can be a stock, it can be a commodity, it can be some currency, anything. We are not worried about that. We are just dealing with the price. So in this figure right now, we have to concentrate just on this demand and supply. Forget what this means, green, red, tails, what does it mean? Need not worry. Just think about it. Whenever there is one level, 1.28, this zone, whenever the prices came into this zone, there were many people sitting there which thought that this is a good buy, and they bought it, and the prices moved up. Second time again this happened, then moved up. But then again there is a group of people here, they think that it is overpriced, so the prices again move down. So this is what is happening. At every point there is buying and selling, buying and selling, and then the prices move into demand zone. Because of overpowering of the buyers, they move into the supply zone. So this is all. What we need to understand is why the prices are behaving in a certain way, and where should we place ourselves so that we can take advantage of that price movement. Right? Makes sense, guys? Till now makes sense? Some response, please. I'm sure you guys know all this. There is nothing new. I'm telling you this, but just to have a complete overview of what technical analysis is, I had to give you this, right? So this is clear, right? Now moving ahead, there are two branches, you can say, of analysis of a stock, future derivative, or some currency, commodity. There are two ways. One is a technical analysis, and the another one is fundamental analysis. You must have heard many people saying, I've analyzed it technically, and sometimes I also give you this, that I've analyzed it technically because it is a short term, and it is a short-term price movement. That's why I have analyzed it technically, and for the long term I would like to have a look at the fundamentals. So what is a fundamental analysis? Technical analysis is based on the market perception. What one particular entity, please do not confuse right now about some stock or some index. No, just say there is something called A. So what is the market perception of the value of that particular entity A, right? What the market thinks it should be valued at. What is the fear and greed cycle in the market? Whether people are dying to buy that entity A because maybe they are hoping, they are speculating that in future terms, whatever the entity A is dealing with, it will be in lot of demand, and the prices will increase. So is that the case? What is the overall liquidity? This is very important. The past Nifty moves, I've remarked it many times. The people have lot of money, lot of FIIs and DIIs have put in lot of money. So that is why the movement of Nifty is somewhat detached from its fundamentals. The liquidity, the market liquidity, because people have money, they want to put it somewhere. So that is driving the market up. So what is the overall liquidity? One more example of this liquidity you can have, if there are 100 people in the market, right? 99 people have already bought some entity at 90 rupees and they have no money left. So who will buy from them? There is nobody left to buy from them. The money has already been exhausted. So here comes the liquidity that the prices will now have to correct for somebody to think, okay, this is now a bargain again, so I can buy. And what is the public sentiment? What people we are thinking about it, or maybe overall, what is the political situation? People are very, very happy with the government. The foreign investors are very happy with the government, and they are hoping that you will have more beneficial policies from the government, so which will get in more money into the market. The business will outperform. So that is the public sentiment. So this is complete group is technical analysis. It may sound a lot of information that I've thrown at you, but just for the sake of these points, just note that there are many factors which may govern the demand and supply. In the end, the thing comes to demand and supply, buying and selling. So these can be the factors. On the other hand, the fundamentals, what has been the earnings? So here in the fundamentals, we are not dealing with the public. We are dealing with that specific entity. That entity, what has been the earnings? That maybe stock, the company, how much has it earned in the last 1 year or maybe last 10 years? What has been the growth? How much it has paid in dividends? What new products are they lining up? What patents they have applied and they may have patents. And what is there any unlocked assets? Unlocked assets, maybe it may have a large land pool which is not, they are not able to capitalize. And land is generally at the fair value that is shown in the balance sheet, but the market value may be different. It may be a very prime land. So such kind of things you analyze in the fundamental analysis, right? So our today's focus is what indicators we are going to study to understand market, investor liquidity, buying selling levels, psyche of the market, and pricing correlations. Prices are also always correlated. If you would notice that recently there was a big drop in PNB, and because of PNB being a public sector bank, other banks also performed negatively, because there is a correlation. People have a sentiment for the whole sector. If one sector there is some scam or maybe something unexpected, so people already related to the other companies also, and the demand for those companies also reduce. So this is a correlation also, right? So okay, good guys. Okay, this is unexpected, guys. Please mute yourself, otherwise I'll have to remove you from the session. I'm sorry about that. Okay. You have seen me sharing a lot of information about the fundamental analysis. Here I want to show you one sheet I have prepared long back, and this sheet right now it has no meaning because we have already passed that time, but just want to show you what we really do when we are going for analysis, fundamental analysis. So this is the income statement of this sheet of this company Trident, right? This is the income statement. Based on this, balance sheet and cash flow statement, based on this, I have tried to project for the year maybe 2014, 15, 16, how much this company is expected to have sales in products, and finally the bottom line what is said is net profit. Ultimately what we are interested in the profit. So this is what we are doing in fundamental analysis. So now I know, okay, as per my expectation, if things go well, the company is expected to earn this much, maybe in 2017 or maybe 2018, the current financial year. So I'll know that after 5 years the company may earn this. So how much should I be willing to pay right now, considering that my money will earn a fixed 8% or 7% in the fixed deposits. So my safest return gives me 7% something. How much I should be willing to pay so I have a return more than 7%, 10% or 12%. So this is what the basic of fundamental analysis is, right? There's nothing more to it right now to understand, just to have a comparison. So I presented this example. Coming back to our presentation, right? There is one analogy. A cow. If I have a cow, you may laugh at it, but it's a apt example. If I have a cow, and it is giving me good milk output, and milk is a commodity in the market which can be sold, and I can earn. So based on the price of the milk and the quantity the cow is producing, I'll go for the fundamental analysis. How much that cow is worth? Year on year it will give me milk, and I'll sell it, and I'll earn. So all that can be done by fundamental analysis. But let's suppose I go into the market and there are many cows available. So what is the market perception? The people are not ready to buy any more cows because there is a supply, lot of supply gut. So this is the public sentiment. So now you can correlate what is the difference between the two, right? So this is technical analysis and fundamental analysis, right? So do we have any queries till now? I know it is a very basic presentation. I've tried to make it as simple as I can. So if you have any queries, just quickly we can take them. Otherwise I'll move forward. Right, guys? Yes, no, something? No response? Alright, then I will move ahead. Coming to the next slide, which is the assumptions. Now I know it is too theoretical, but I'll take you to the charts again after this. There are few assumptions about technical analysis which is very important. The first is the market discounts everything, whatever information is available in the public domain or private domain, it is reflected on the price charts. I always, whenever we are discussing any analysis and all, I tell you just ignore the news, because that news is disseminated quite late to the general public. The people who have that news, or people who have created that news, they have already acted upon those news items, and they have, buying and selling has already taken place. So in the technical analysis world, you'll find everything on the charts, right? First assumption, if we believe in technical analysis, is that market discounts everything, market knows everything. So you must have seen, before some result is gonna come out, the prices start moving, and by the direction of the prices movement, you get an idea, okay, what has happened. How? Because market has already discounted it in the prices, right? The next is price moves in trends. There's a particular trend prices are following, so that's why the support and resistance areas tend to repeat themselves, right? And then history tends to repeat itself. The price patterns which have occurred in the past, they tend to occur in future also, right? So what is our goal is? Our goal is to seek to identify price patterns and take advantage of them. Okay, so let's just, for the sake of clarity, we are clear about what is technical analysis, right? Guys, till now you have any doubt, then I'll move forward, please. Anybody who would want to say something, you can, unmute yourself and we can go ahead. Okay, so this is clear. Srinivas, Vignesh, thank you for your response. Yeah, so this is very basic, so I am sure you would not have any doubts. So if I tell you there were three basic assumptions, prices move in some direction. If I tell you, okay, so let's suppose many people, you concentrate more on candlesticks. I don't use candlesticks because I am just interested to know what is buying and selling, right? So if I tell you that there was some price, this is open and this is close, ignore the highs and lows. This is open, this is going up, this is your close, right? This is open, going up, this is going close. What will you tell me? That each day prices are moving up, that buying is coming, right? This is very clear from this. If I tell you now that the next day something like this happened, and then again this happened, now what has happened? Can anybody give me some response on this? Is the buying over? Can we say that buying has ceased and people are not interested in taking it forward? Guys, all these days, this is clear from here to here, every day, right? So Samir says the buying is continuing, right? Nikhil says no, the buying continues. This is what you're saying, Nikhil, right? So what has happened to this? Why it went down? I would ask you then. It was in the uptrend, then it went down and started up, right? So yes, Samir, profit booking. Somebody who has bought here is interested to take profits at this level because he thinks that maybe it may not go any further, right? Thank you, Nikhil. Yes, profit booking. So he thinks that it may not go any further, right? So this starts coming down because, like this guy, many people start booking profits. Now, can we say that during this down phase, sellers are there and there are no buyers? Can we say that? No, we cannot say, because at every price, at this price or this price, what is required is somebody selling, so we need somebody who is buying also, right? So here maybe somebody who has bought late but he has an idea, okay, this is a lot more than this. So even if this moves a bit lower, I'll keep averaging. I don't care if it is going down, right? And somebody who has already bought, he's seen his up move and he's saying, okay, I need some profit and I'll be out, right? So this is still an uptrend. You agree? Right. So now next, if I tell you the prices, maybe, the prices, this is the up move, this is the another up move, this is the another up move, and then it moved down, it moved down, and it moved down. Now can you tell me that prices have stayed same? The up move is up move is intact, people are still buying it, this is up, and this has turned, right? Samir, thank you so much. This thing has turned now. How can we say that it has turned? Because the initial level, it was broken, right guys? So based on this, if we see that the prices started moving up, they retraced a bit. If they start moving up again, we can say the up move is intact. Otherwise, the selling has taken it down and people are not interested to buy. What we are interested in, we'll keep studying these levels from where maybe now next it happens something like this, moves down, moves up, moves down, moves up, moves up and moves down. So we need to understand whether the previous high was taken back here, was the price able to take back the previous high, or it started moving up as it is. This is the study that we normally do in technical analysis, right? This is very simple. So let's just open one chart. Let's just open one chart, any chart. We'll for the sake of clarity, we'll take the Nifty chart. Nifty being the index, it is highly traded and easily you can find it anywhere. Nifty NSCI chart, I would just, sorry, I will remove all the indicators. We don't need so many indicators. We are just interested in understanding the price moves. Alright, so this is the chart. This is again the channel I marked long back. We are outside the channel range, which is right now not important. Okay, this is the price movement, and just to make a point that we are not interested in candlesticks right now, I'll have a bar chart, right? So here we can see, if you would have seen my earlier video on the trends and time frames, you would have seen that I've told you there are major trends like this, and there is a minor trend maybe like this, right? So what we need to understand is the prices here started moving up, right? You can see, then they started retracing a bit. The low of this is exactly, as you can see, the previous high. So maybe there was, now let us understand what is the psychology behind this buying and selling. Somebody who was not sure about whether he should be a buyer at this level, he has seen the prices moving up, right? So he, in his mind, he creates one regret that I should have been a buyer. If he had been a buyer, he would have seen this profit coming in. So now the prices started moving down. So the person who is missed out here, he is waiting for a good opportunity to enter again. At this particular level, he sees, oh, there was a previous peak, right? So at this peak, he initiates a buy. So something like people waiting on the sidelines, they initiate buys close to the support levels, EMA levels, or likewise. So that is why the market moves in a direction why it moves, right? So this much is clear, guys. just a general understanding why the prices are moving in a direction if they are moving, right? Don't consider about trends or anything right now, right? So our main aim is to identify where the prices are moving, and then we can exploit that to our advantage, right? So moving on, the most of the technical analysis I would say is based on the Dow's theory, right? We are not going into the detail of the theory, it is not required. What I'm about to tell you is the Dow says that prices, they move in a direction, either they are trending, that is moving up or moving down. Like in this chart, this is a trending price, right? From here to here, from here to here. Trending means moving up or down, or prices are ranging, or like it's written here, trading. So prices are flat, moving sideways, moving sideways. So this is what Dow says. Dow says mostly there will be a uptrend, a downtrend, or a no trend, but you will be able to identify what it is, right? Dow also says that any price move should be confirmed by volume. Volume is also important. If prices have moved from here to here, let's suppose, but there is no volume in the market, that means the prices are being inflated. Somebody is playing with the prices and he is inflating the prices, right? Dow also states that that moving averages, the price moving averages will also confirm this price moves. What are price moving averages? I'll show you on the chart, right? So this is few of the summary points of Dow theory. If you just have some technical analysis book, you should go through them. Otherwise they are not, even if you just concentrate on the trading methodology, you can for some portion you can like ignore it, because you need to have an understanding that what meaning the volume has in the trading and what meaning is the price open and close has, right? But I would just suggest you that you should for once go through that, right? So this is the Dow theory. Now coming back to the chart, now here we have the price movement. Now what happens is, many a times the price patterns are not clear. Let's say from here to here, I'm not able to understand what has been the price move, right? I'm a new person, I don't understand. So what I do is I can use the averages. It is the indicator which will tell me, okay, which direction the prices are actually moving. So let's suppose personally I prefer exponential moving averages. On this platform investing.com, we can have moving averages exponential. So now what the moving average is giving you, there is some particular price movement, it is giving you a weighted average of all the price movements, right? So this is what moving average is. Likewise there are many indicators. So now the price patterns are before our eyes, but to understand them better, what we do is we employ indicators, right? This is clear. So many people, what mistake they do is they use the indicators straight away and then they come to the price patterns, which is very wrong idea. You need to understand that indicators will only confirm what your thought is. Like at this level, just to give you an example, this is the trend I've marked. Started from here, went up, came back here, and again jumped from there. At the second jump, I think, okay, maybe there is one line trend which the prices may be following. So whenever the prices touch this again, I should start buying. So here I am waiting for the prices to turn back again to this trend line. So at this level, should I be a buyer? This confirmation, my direction is long, I want to buy. I don't want to sell at this level, so my direction is long. Whether I should buy or not, for that particular decision, whether the entry should be made or not, I can use the indicators, right? And not just ignore this trend line and here I see, okay, what is the indicator telling me, and then decide buying or selling. That is a very wrong way and a very wrong idea of trading, right? So all these things also comprise of the trading methodology, how and what we are analyzing and how we are proceeding, right? So there are many indicators, they're all listed here. We would surely be covering most of them in our coming sessions. For the time being, we just need to understand, okay, we have to basically analyze the price move, which is always important, right? Is this too much of theory, or we're going great? Because the session today is the introduction to technical analysis, right? So I'm not going too much detail into the indicators. All the indicators have their meaning. Many times people say that I traded, but the indicator gave me false signal, so I was not able to make any profit. The indicator is never giving you a false signal. Indicator is only giving you the information it is designed to give you. What you are interpreting of the information is wrong, right? Guys, do you want to take a break? Anybody wants to add anything? Or maybe there is something I've missed. There's one thing which I have missed, and which is very important, and you should always remember it. Before trading, always keep in your mind that whenever the prices are moving in one direction, they are trending like up. Come to the chart. If the prices are moving up, right, they'll continue to move up unless there is a very hard force which turns it down, which is also a Newton's principle, right? Newton's second principle, right? So right now, if you ask me Nifty, I would tell you the Nifty is moving up. Direction is up. Has it turned down? No, I don't think so. What I can tell you is maybe Nifty right now is undecided. Something here. If I mark it like this is the level Nifty is jumping from time and again, and there is one on the smaller time frame. If you see hourly, there is there is this trend developing which is holding Nifty where it is right now, right? Just a rough idea of how analysis is made, right? So this is one very important learning from the Dow Theory, right? Coming back to our presentation, guys. Now, what are the criticisms also? If you tell me, sir, I am using the same methods which other people are using, so how can it be true that I can make money and other people will not make money? Or maybe because if you are making money, somebody else will have to lose money. It's a zero-sum game. Somebody giving you money, that's why you are having. No money is being created. So what is the criticism points? One is, the markets is a efficient market hypothesis, which says that the markets are very efficient. As I already told you that all the information that has to be taken in, priced in, has already been taken. So the markets are very efficient. So how are we supposed to take advantage of it and make money? One criticism, which is somewhat a valid point, right? And the second is random walk theory. So the random walk theory says that there is no correlation. There is no correlation between the prices and any fundamental change. They are very random. Prices are random, and they are just mania and greed and fear in the market which is governing the prices. Both different, but this is the criticism. I would tell you one thing. If this is so true, if the random walk theory says the prices are random, then how are we able to predict the areas of support and resistance over and over again? How can we mark these areas of support and we can see some reaction in the prices from there? In the Fibonacci retracement level tutorial we had, on the live video I had shown you some retracement levels for Reliance, I remember, right? And then there was one more, Yes Bank, right? I remember. So have you seen after that what has been the price movement? Yes Bank has moved down, I know, but then Reliance has pretty well moved up. So how are we able to predict? So one thing we have to understand is technical analysis will never tell you what price any stock will be moving to. What would be the price in future? No, it will never tell you. It will always tell you that there is a probability based on the study that price may move in a particular direction, and then from the identifying support and resistance areas we can find where the prices are likely to move. So this is one thing. And also, if you tell me, sir, I am reading the same thing, I have read the same moving averages crossover, I have read the same support resistance areas, that everybody has done that, everybody has read the basic technical analysis books. So then why is there a difference? How are people able to take profits? So I would tell you that the understanding of the price patterns like this, if I tell you somewhere, if I tell you that this is just for the sake of understanding, this is a head and shoulder, this is one pattern. I may not be correct on this one, just to give you an idea. If I tell you, okay, this is a head, this is shoulder, this is head, and this is another shoulder, let's suppose. So, and once this neck is broken, this neck is broken, is where you generally say the neck has broken and the prices have reversed. This is what I have seen. Somebody else would say, no, this is a wrong interpretation. The prices are not forming any head and shoulders, but they are just, if you remember, if I put a Fib retracement, their prices are about to touch 62% retracement and they have jumped from here. Something like that, On the one interpretation, head and shoulders, I am saying it is gonna go down. The other one says it has found support and it will move up. So you can see there can be many subjective interpretations. And I am right now analyzing 1 hour chart. Somebody would be analyzing 1 day chart. Somebody would be analyzing 15-minute chart. So this is the randomness. This is the understanding that we need to know, that everybody is analyzing in his frame of mind. So many times, if I have analyzed something, I cannot be 100% sure that I am correct. What is there the probability that I would be right? There is a high probability as per my past experience and as per my back testing which I have done. Back testing, how it is done, I would also cover in a separate session, and I would release one software for that also, but not right now. So this is how you test your strategies, and you understand how much successful they are, and if you are wrong, how much you are going to lose. This is the crux of it. More than earning anything, you have to save what you have, right? So how much am I going to lose if I am wrong? So, and will I be able to trade again if I lose that much? This is important, right? So this is what all I have, guys. In the end, just one more information I would like to give you, throw at you. Many times I've discussed this again earlier also, that if there is some price, let's suppose I bring a price movement here, and I would take a snapshot of it. This one, right? So if the markets are so efficient, which is efficient market hypothesis, why are the prices moving so randomly? So now what happens is, prices are moving something like this. If I take an average, right, this is the average. You would agree with me? There is this price movement, right, something like this. So this is your mean EMA, mean, right? which I personally generally take as 20 EMA, 20 period or 22 period. This price agreement around the mean EMA is generally 5 EMA. Always remember. And this is not hard and fast. You'll see some prices move in some other fashion, some prices move in some other fashion, and this support wherever the prices are jumping from is your long-term EMA, maybe 200. EMA or DMA, whatever you prefer, simple moving average or exponential moving average. So this mean EMA, you can say, is the intrinsic value. Prices of all those days, 20 days is a 1 month period, for that 1 month people have agreed on this particular level of price, right? So this is how the support, EMAs and price moves are tried to understand, right? Of course there's a lot more to this, but for this session today, I think because it was an introduction, this much is enough. Guys, if you have any specific queries regarding to what we have discussed, I know it is very basic, but if you have any specific query, please ask me. And you have to attend the other sessions as well in future, where I'll be taking individual indicators and their applications, but that is for some other time, right? Samir, thank you so much. All basics refreshed. Thank you. Others, if you have anything. Thank you. Anonymous, you have no name. Guys, anything or any trade that you would want to discuss right now? Any particular trade where you have made profit or you have made loss? We can have it right now. Otherwise, that's it from my side. If you guys just allow me, then I'll close this session. Bank of Baroda. Okay, Nikhil, you tell me. Bank of Baroda. What was your position and why was particular position which you had what you had, right? This is Bank of Baroda chart. We would take a daily chart. 1st March, right? So what was your position? I have marked something. See, the Bank of Baroda was moving in a channel and then it broke channel. Guys, you can see this one thing, a very interesting thing. I've discussed this many a times. This is the channel. After that, I did not track this stop. If you take this channel a bit forward, right? So once this support of the channel is broken, right? Samir, can you hear me? You asked me many a times this. Once this support is broken, it is always retested. And once the retest has failed, I would say it has really broke. Always the retest always happens. So that is why I'm telling you the Nifty crossed 11,000, right? Touched 11,000, then moved down. Is it down? No. I believe it will try to test it again. Maybe it will not reach that much a level. 10,700 there is a gap. 10,850 there is a gap. So those levels it will try to touch, and if it is able to cross it, then it will surpass 11,000. If not, then we may see levels of 9,500 or 9,700 for sure. You take my word. Today is 3rd March. Take my word. We'll discuss about it again later. Right? So Bank of Baroda. Nikhil, what was your position? You were long on 1st of March, right? Why were you long? Can I ask you that? Yes, please. Nikhil, hurry up. We don't have much time, please. Nifty bank recovered. Okay, good. This is how you analyze the sector and then come to the individual stock, right? And you can say, okay, it has jumped from a support line as well. I've marked the support. So it had jumped from a support line somewhere here. So you bought on this day first, this day. After it had jumped, you bought, and suddenly it started going down, right? Yes, it was on. What was your stop loss? Can I ask you that? See, I don't think it is a bad trade because the prices are jumping from a support level. This level I had marked long back. I did not mark it right now. And the prices have reacted close to this level. You waited. Was it an intraday or swing trade? Nikhil? No stop loss. Oh, don't do that blunder ever again. Don't do that. When you're trading, you need to have stop losses. Intraday. So, intraday, what chart you prefer? 15 minute, 5 minute? I'm sorry, I'm asking you a lot of questions, but I need to understand your psychology. 5 minutes. So, very short term time frame chart. 5 minute. Right. Okay. So, it will be very difficult to ask you where you bought. But as a rule, when you are going for a 5 minute chart, I've already shared in my previous session. So your long term view is by what time frame? Long term view. What time frame? Samir, can you tell me? See, I'll tell you this once again, right? How many hours are there in one day? Trading hours. There are 5 to 6. How many days are there in 1 week? 5 trading days. How many weeks in 1 month? Trading weeks. 4, 5, right? So there is something about the factor 5. 4, 5, 6, there is something about this factor 5. So what I do is I prefer to take 5 as a multiple. If I'm going for a 5 minute chart, I'll analyze first the 30-minute chart, right? On the 30-minute chart, let's suppose here from this level the prices have dropped down. Okay, I mark this level. I'm here, somewhere here. The prices started moving up. At this level they were not able to cross. So by this I knew that some reaction is coming at this level, right? My direction is down. Then I come to 50-minute chart. This is what time I tell you. See, 11, 12. Okay, by close of 12 I'm sure that there is a down move expected. I come to the 5-minute chart. At 12 o'clock I've marked this line, right? At 12 o'clock I am here. Price moved up. What I'll do is I'll go short at this level maybe, or I'll wait for a pullback. That pullback I can confirm because by this bars, whenever the previous low is crossed. So what generally I do is put a stop sell order here, put a stop sell order here, or maybe a little lower. When it's broken, the candlestick or the bar chart will tell you that this is a short candidate, and then it goes down. Boom! It's a good trade, good short trade. This is how you analyze. You go for a long-term analysis, and then you come to the shorter time frame. But the today's session is not more about the analysis, just the background. Okay, guys. So thank you so much. I'm closing this session. If you have anything, you can write to me at this, right? So all the upcoming webinars will be available here, and you can write to me at support@moyt.in, right? Thank you so much.